welcome to Fintech Insider Insights. I'm David Brear, CEO here at 11FS. In this episode, as we round out 2023, I have pulled together some of our favourite Fintech Insider moments. We're going to look back at a pretty jam-packed year of Fintech Insider news. We've had the highs from the exciting startups raising money to established firms finally making money and a whole lot of M&A in between. But we've also had the lows. Some companies went under while others simply underperformed. And as a whole, the world battles through some pretty rough economic times. As we close out the door on the year, we shine a light on some of the biggest stories of 2023, as well as some of our favourites. Let's meet the team who's going to be on this episode. Firstly, I am delighted to welcome Kate Moody, Strategy Director at 11FS. Congrats on another year of podcasting under your belt, Kate. What's been your highlight so far?
Oof, it's hard to tell, isn't it? Just so many. I think, sadly, actually, my highlight was something that didn't even make it into the final edit. I had a wonderful pre-show chat with some guests about flapjacks, which for some reason didn't make it into the final cut, but actually for me was pretty life-changing. So fintech's one thing, but really it's all about flapjacks.
I can get behind that. Biscuits, confectionery, all of these things add up to a happier life, don't they, at that point? But good to have you on the show anyway, Kate. Next up, we're also joined by David Barton-Grimley, Strategy Director here at 11FS. How does it, you're a fully fledged, badge and everything Fintech Insider host now, David. How's it going?
Yep, I've sewed the badge to my T-shirt. Big kudos to the both of you. It's a hard job. It really is, particularly, doing this over the last few years. But I'm loving it. I think it's great fun.
The more you do it, the more you relax into it, the more you enjoy it. There's like this positive cycle. You've got to get through those, Kate, first 100 episodes, and then it's like, it's all downhill from there, isn't it?
Pretty much, yeah.
Very good. And finally, a big hello to Rachel Pandyan, who is a venture product lead here at 11FS. I guess you're the newest member of the podcast team, Rachel, but good to see we've not scared you off with your first few episodes getting in front of the microphone. So how are you doing? How have you enjoyed it?
Yeah, good to see I haven't scared you guys off yet either. But now I'm doing well. I'm excited to run through all of the stories that we've covered throughout the year, and hopefully not as much buy now, pay later, although I'm not sure that's on the cards for today.
I don't know. I've still got a lot of Christmas presents to buy, so we'll see. It might not be on the agenda for the show, but probably on the agenda for many of us. Anyway, thank you so much for joining us. Maybe let's dive in straight away. I think we should probably start by doing a quick temperature check on the world of fintech around us, because for all of the ups and downs within the industry, there's been a whole lot more turmoil really going on. I think actually, we could jump straight into macroeconomic trends of everything that's been happening over the last year. But probably first and foremost, interest rates are a thing again. That's weird, isn't it? It seems to have sort of broken some people's business models, made gigantic business models for everybody else. But David, what do you think? There's people been scurrying around trying to figure out what this reality is.
Yeah, and it's been a bit of a mixed picture, right? So if you are Wise, for example, you're making masses and masses of profits, partially off the back of the interest rate increases.
You mean Wise like the company, or do you mean Wise like a fellow who is, maybe slightly more astute?
General wisdom, or people who are more astute are making more money out of interest rates, I guess, but no, TransferWise, right. Very, very specifically. So I think their interest earned on customer cash balances jumped 848%. That is a huge, huge amount. But it isn't consistent across the world, right? So if you are a fintech and you're new to taking deposits and you're able to lend out those deposits and therefore make a spread on that, your net interest margin, then yes, you're going to be doing very well. But if you're a very large incumbent financial institution that has a very, very large loan book, and some of those debts might be going bad, right, for example. So, I've seen news across the last year that the net interest margin is actually compressing a little bit in some markets. And then, of course, we sit here in the UK and we also think about the US and our interest rates increasing. But actually, if you look all over the world where fintech is, it's a bit of a mixed picture, right? Like a lot of other countries are used to having much higher interest rates more historically and still have that as being the case. So yes, it's exciting in some cases, but I don't think it's a clear-cut win.
I'm really interested to see as well how long it takes to feed through to customers, because we've had such a long time period of such low interest rates that customers have almost got out of the habit. majority of customers have almost got out of the habit of expecting their money to earn money. And I think we're still seeing that take some time to kick in. We've seen increase in switching rates in the UK, for example. We are seeing people start to move their money around. But I think we've had such a long time of such historically low interest rates, and then they've increased so rapidly that I think it has been a super interesting year to see how that feeds through to customers as well. Like actually, the time it takes to change expectations and behaviour seems to be a lot longer than it does to change interest rates. We've had 13 interest rate changes in the UK in like less than 2 years. So yeah, that kind of lag between what the industry is doing and what customers are expecting or looking for, I think for me is super interesting.
Yeah, I massively agree, because we've seen in the absence of savings accounts and ISAs doing anything for like the amounts of money that people are investing, they're looking for other products. But I think still I'm not seeing this consumer understanding of investments on the whole increase. We've got more products out there. Obviously Nutmeg are doing very well at the moment. Monzo've added it to the app, but I don't think your like average Joe truly understands what it means to invest and the long term it requires to get something meaningful back. And so I don't know, I think the trying to get savings habits back in and getting customers to feel confident in having a large chunk of money in it doing something rather than taking out products that aren't always in their best interest. It'd be nice to see more of that coming into the market next year and going forwards.
Yeah, I mean, it's always the flip of this is hey, if you're sitting on loads of cash and the interest rate is there, wonderful, I make money from my money. That's awesome. But I guess the sort of reality of the situation is we're still dealing with a pretty turbulent time when it comes to cost of living crises, and obviously as interest rates go up on your savings, so do they on your credit cards and your loans and your mortgages. So I guess maybe the biggest hit, to your point, Kate, hasn't yet been on, well, where do I put my millions? It's actually, Jesus Christ, how do I afford my mortgage? And the housing market has definitely seen a real hit, hasn't it, in the last year? God, we started very jovially talking about biscuits. It's all got quite dramatic soon, isn't it? But the cost of living crisis definitely doesn't look like it's going anywhere anytime soon, does it?
No, absolutely not. And I think what we see in the mortgage space in particular is that this isn't just a one-time thing. Like this is going to have ripple effects for years to come. We've started to see in the UK and in other markets the increased burden of higher interest rates leading to higher monthly mortgage repayments. Obviously that directly impacts homeowners. It also impacts the rental market. It's not just ordinary individuals who have mortgages, it's landlords too. We've seen landlords increasing their costs, passing those on to renters. So this whole space is becoming increasingly expensive, and that's not. We're expecting interest rates potentially now to start to kind of come back down, but that's not necessarily going to instantly impact on that space. We're going to see this increased sort of crunch on consumers' wallets for quite some time to come. So yeah, I think it's been a super interesting space this year. Obviously, as David alluded to, interest rates have changed the business models for lots of fintechs, but they're also just changing the day-to-day lives of millions and billions of people around the world. So yeah, I'd love to talk just about biscuits, but we probably should also acknowledge the fact that lots of people might have had to cut back on their biscuits this year, sadly.
Yeah. I really wonder the generational impact of this. Like, I'm growing up and I see a lot of my friends who have parents who have bought houses years ago in London, and then they get to like live in that, or they might have bought a house like no money at all in a really great location. I don't know many people my age who are looking to buy right now, especially in London, never mind the rest of the UK. What does this look like? What does wealth and what you pass on to your kids look like in 20 years' time? Because I, for one, not buying a house for the next 5 years at least. I think it shifts how people's finances look in the future, and especially with renting, you can't even afford really to rent. Is digital nomading the way forwards? I hope not, because it's really weird. I was going to say another word there, but I don't know. I think the cost of living crisis, I think we feel it now, but the real impacts is something that's yet to come. And sorry, this just got more bleak, and as I went on there, maybe I should stop.
I feel like we were staring into Rachel's soul ever so slightly. There was the slight moment of crisis where she planned out the next 30 years of her life there. It was a nice touch.
I guess to bring it back into the positive though, one thing that I have loved seeing this year is the fact that fintechs have been able to respond so much faster to these ever shifting times. They've been able to adapt to these interest rate changes pretty much instantly in some cases and pass those rates on to their customers much more directly. You know, we are seeing those larger firms struggling to kind of make those speedy decisions because, precisely as you said, David, like there's just so many more complexities on their books. You know, they've got to juggle, you know, the loan book plus the savings accounts. So it's just a more complex picture. But I've really enjoyed seeing fintechs kind of have this time in the sun where, you know, they're able to kind of really show to customers that there's a benefit to, you know, looking around and looking at other options. We know that the financial services space is absolutely crippled by inertia in many instances, and actually this has created a really tangible benefit for many customers to actually like get up and move their money.
And in doing so, a lot of these fintechs have begun to build features which provide actual value, you know, rather than just like, you know, where PFM used to be a few years ago, you know, let's provide a graph and show where your forecasted earnings are going to be. But actually, you know, maybe here is a better deal for an energy bill, or here is how we're going to build a credit profile a little bit better. So it's been great to see some of these fintechs, I don't know, like Snoop, Plum, Nude, all of these companies who we've been discussing on the podcast over last year really try to think more thoughtfully about what customers can do better with the less money that they have to spend. I mean, what that translates, though, back into profit for the fintechs, I think is very difficult to say. You know, if you're unable to take deposits and lend off those deposits, like how banking works, right? Then, you know, where's the money going to come from? Where's the profit going to come from?
Well, it's an interesting one, isn't it? I know over the last couple of years, we've always had the debate around what's the strategic advantage of a fintech, what's the strategic advantage of a bank, you know, and actually in such complex times, being even vaguely monolithic when it comes to product offering is probably the worst thing you can possibly do, because if the backside falls out of one product, you are screwed as a business. Whereas actually this might be this is the heyday for the banks again, right? You know, we're seeing valuations tumbling, we're seeing acquisition opportunities huge, we're seeing, you know, whole swathes of people's product book suddenly becoming profitable that weren't profitable for a really long time. Like, that's an amazing space. And definitely, I mean, from the things that we do as an organization, you're seeing people come to the fray that maybe weren't able to justify doing stuff before, but actually because of the market, you know, they're kings of the world again. So it has been a funny old year, and like I say, I mean, that's without even throwing in the sort of geopolitical side of things with everything. Obviously, the Ukrainian war, we've seen everything that's happening with the conflict in Gaza. I'm never quite sure when you classify a conflict versus a war. Is there like an official? You call it a war after a period of time, like, but it's just
special military operation.
Is that? Yeah, exactly. I'm not sure who's quite downplaying one of them and upplaying another one, but it feels like we're all in quite weird times, doesn't it? In that sense, in terms of all of the things that we're seeing locally, but all the things that we're seeing on TV as well. But I mean, this all does sound very doom and gloom, though. I know, and there were a few things that were better than 2022. We should sort of add before everybody's like, "Oh, Jesus, this is a bit depressing end of the year." I mean, Revolut reported its first year of profit. I mean, that's good. We're seeing sort of fintechs growing up into, you know, profitable businesses, particularly for somebody like Revolut. I mean, Revolut are kind of the WeWork strategy, but for fintech, aren't they? Like, go big and scale really effectively. But it's great to see them get to profitability and not go the way, obviously, WeWork did, which was filing for bankruptcy. Was it 3 months ago, 4 months ago? So, I mean, that's a good news story, right?
Yeah, I was so skeptical about Revolut for so long. And the one thing you can always admire about them is the pace at which they push different types of products out. And they always talked about their ambitions for a super app. But now seeing Revolut 10 and the rework of the app come to life, you can actually see what looks like a financial super app in place and them turning into profitability. I think it was a big bet they placed on their strategy, and it's paying off, I think. And I love the way that they've structured it, even from the way their app looks to the premium models that they offer, the tiered servicing. I think that is a business model that hasn't been done in banking in the UK, at least, well. And seeing that come into the market now, I think it's amazing to see them doing it. I'd love to see what happens for like apps like Monzo, who came out with a much more sparing product. Now their app is turning into a really bloated, like, I have a premium account with Monzo. It's hard to find all that functionality. What does it look like for a startup that didn't bet on being a super app but still needs to compete on all of that functionality?
But will they get a banking license in the UK? Ooh,
True.
I don't know. Will that happen?
I think no. I don't think so.
Maybe.
I think the thing that I'm finding really interesting, I remember, when I first joined 11FS many, many moons ago now, like when we were sat in rooms with senior bank executives, the conversation around fintechs was, in all honesty, quite dismissive, right? Like, oh yeah, like they've got a nice design and yeah, they've got a nice app, but like, what are they actually going to do? You don't really hear that conversation anymore. Or if you do, like, it's kind of like one lone skeptic in the corner. And I think actually kind of that whole industry perspective, I think has been shifting gradually. Like it's not just happened overnight this year, but I've noticed it particularly this year that actually it's not about our fintechs like here to stay. It's like they're here to stay, but where are they going to go and where are we going to go therefore as a result? So I think that's been obviously like Revolut, interesting to shine a spotlight on them particularly, but I've been loving seeing across this year like fintech after fintech after fintech in lots of different geos having success and starting to kind of build their way back up to profitability. We've seen Atom Bank, Monzo also kind of going to profitability earlier this year. Like lots of them are starting to make these commercial models make sense, in large part driven by the interest rate environment. So will it last? Wait and see. But yeah, I'm just loving kind of the change that you're seeing within financial services as a whole in response to fintech. That's been great to see too.
And what do you think's that sort of driver there, Kate, in terms of the sort of people sort of setting up? Because definitely, as you say, there's the narrative is shifted, hasn't it? It's no longer the when they get to. Is that profitability, or do you think it is just the sheer volume of? I mean, if you look at Monzo, used to be a pocket money for adults type thing. Actually, now it's doing investments and pensions and insurance. Like it's actually doing sort of big boy, big girl stuff, right?
I think it's kind of a whole combination of things. Like I think, yes, it's profitability. I think it's, as you say, like it's the product set, it's the hires, it's the customer numbers. I think it's just like the fact that they're still here. I mean, I know we might come on to it later when we talk about sort of movement of people, but I thought it was really interesting in Jonas Templestein's letter that he published around his departure from Monzo. He was talking that even he thought back in 2020 when Monzo were really struggling that they should have just taken the easy option and sold, and they didn't. So the fact that for some of these fintechs that have hung around, they've ridden through some difficult times and yeah, I think it's really cool to see what happens next. I'm really excited for next year.
How much do you reckon on that though, Kate? Is like it's not just the fintechs now, because like I think we've got a kind of framework. We talk about the banking battlefield. Go look it up on YouTube. Anybody listening to this conversation, then actually like the people who are on the banking battlefield now are not just the teeny weeny fintechs. We were talking about teeny weeny beanies earlier on, weren't we, David? But the idea that essentially, I mean, somebody like Chase in the UK, like that's a heavily capitalized, gigantic bank, but is being able to act and run like a fintech. Like almost like the threat vectors fundamentally shifted from what it was.
Yeah, absolutely. And I'm guessing probably at some point in this show, we might talk about a little company called Apple as well. So yeah, I mean, we've talked for a long time, as you say, about like what that battlefield could become. I think like that battlefield is now established, and it's about who's going to thrive and who's going to fall by the wayside. So
well, and speaking of organizations falling by the wayside, unfortunately, Silicon Valley Bank, RIP. I feel like actually there's somebody we should talk about as didn't quite make it to the end of the year, but biggest bank to fall since 2008 financial crisis. I mean, it's obviously sad for Silicon Valley Bank and the people that are there. Bizarrely, do you know what? Not sure if this is for the podcast, so let's see if this keeps in the edit or not. But I had their wrapping up letters come across my desk 2 weeks ago, actually, in terms of all of the people that they used and everything. I mean, that was a very well-run bank, like in terms of the vendors that they had, the tech estate that they had, the people that they worked with. I mean, it's sad to see them sort of leave the market. Equally, it was pretty damn impressive to see how quickly that got dealt with by regulators all around the world to stop that being in an already tumultuous marketplace. The impact, the work that the Fed did, the PRA, the FCA, the government to allow HSBC and various others. I know NBC over in Canada as well, picking up the business banking book. I mean, it's interesting to see how that regulators can move really quickly when they need to, right?
Yeah, and HSBC Innovation Banking in the UK, right? It'd be interesting to see what they what they do with that there. But I think the interesting story about SVB, as much as it is about their collapse and some of the riskier investments they made with the book, is also a bit of a reflection on the startup industry overall in the US, in the sense that you had these huge, almost passive deposit balances, right, with fintechs and fintech startups that were maybe not profitable or not revenue generating, sitting on large quantities of cash. And the very second they got wind of there maybe being a risk on Twitter, which is now called X, and various other platforms, rapidly removing that money and trying to stick it to somewhere, secure and safe, because without that cash, there is no roadmap, which is, I think, in some senses different to how other businesses operate in the world, right? You have incoming cash balances constantly from revenue that you are making. You have distributed banking balances across multiple banks all across the world. So there's something quite interesting about the situation with the startup industry overall as being quite negative.
Yeah. Anybody else on that in the room?
No, I mean, I think it was a hugely interesting episode. I thought it was an interesting reflection on the perception of the fintech market as well, because certainly what we saw in the UK was, I think, again, the very initial reaction from the regulator was, oh, it's quite a small bank, it's only got 3,300 customers and it's only got, 6.7 billion pounds in deposits. Like, is it a systemic risk, or whatever the phrase is that people like to use? But actually, kind of when you dig beneath the surface of it and you look at, like, okay, well, yes, it might not be like a huge number of customers, but who are those customers and what are they contributing to the economy? What do they represent in terms of growth potential for the markets that they're in? I thought it was really interesting from that perspective as well, because once they actually started to think about who those clients were, the perspective, as you say, David, changed like super rapidly, and they made some really important decisions very quickly. I still find it funny they called it Operation Yeti. I don't really know why. I don't know what Yetis have got to do with Silicon Valley Bank. But anyway, that was what the UK regulator, I think, called it when they sort of worked through the weekend to kind of come up with this plan for HSBC.
Yeah, I mean, it was a similar one to, I mean, I guess obviously Silicon Valley Bank didn't make it, and the fact that the government and everybody reacted so quickly to stop it becoming a domino effect. I mean, Metro Bank this year had a little bit of a hiccup, didn't it? And actually, it felt like the media were trying to turn that into a problem. It's interesting, isn't it, how these things get portrayed in the market. Most people walking around the street, if you're walking around in Norwich, like Silicon Valley Bank doesn't sound like it's going to affect you. Do you know what I mean? I guess Metro Bank doesn't, because it's very London centric, but it definitely felt like the media were kind of after Metro Bank a little bit to make that into a big deal. But it's great to see that actually all of the financing got put in place and everything got moved forwards. But I mean, it was definitely a year that we saw not just Silicon Valley Bank being acquired, but a lot of other organizations being acquired. Where small little fintech called UBS acquiring a tiny little fintech called Credit Suisse. That was a weird one, wasn't it? 3 billion, which was interesting. But I mean, I can't help but feel, and everything you sort of hear is that acquisition and integration is going swimmingly in terms of actually sort of pulling those two organizations together. I feel like the obvious thing coming from the UBS Credit Suisse has to be the regulator stepping in at some point to do a separation, though. Having seen this movie with Lloyds Banking Group and TSB and obviously everything with RBS and onwards with Williams and Glyn, like, surely UBS are going to have to go carve that up and sell off pieces of it at some point. What do you guys think?
Yeah, and actually with the Williams and Glyn example you mentioned, they had to stop that, didn't they? They couldn't actually get to the end of it because of how difficult it is to... in that case, they were divesting, right? So the operational complexities.
I've got some stories that are very much not for the podcast that actually are around a whiteboard explaining to people why that was a very bad idea, but we'll come back to it over a beer, David, don't worry.
Yeah, I do too. I mean, God, yeah, that was a really tough time. But I think just to the macro point of these two behemoths, these two whales of an organization coming together, you can imagine all of the organizational complexity, duplicated roles, who does what. God, I don't want to be in that program team.
Yeah, I mean, I think to your point, David, about like, will they split them back up again? I suppose if you believe the reports that are starting to come out now about like the staff turnover, then I think the risk is maybe there aren't any Credit Suisse employees left by the time they get to that point. I think I've seen reports of 150 people resigning a day. because UBS have stated, understandably, that they will look to make cuts. Bringing these two organisations together with a lot of overlap, doing a lot of similar things for similar types of clients, it doesn't make sense to keep two mirror organisations running in parallel. So UBS have said, we're going to make cuts. Credit Suisse staff are probably saying, oh, don't fancy hanging around for this. So yeah, I think it's going to be really interesting also to see kind of what the ripples effects are of the talent movement. We know that there's lots of, we have a lot of conversations with a lot of organizations about the disruption that needs to happen in the wealth space. The fintech hasn't necessarily really moved into that market yet. It'll be interesting to see if some of these people from Credit Suisse end up deploying their insights and experience somewhere else.
Yeah, I don't want to sound callous, but actually it's not a bad thing because somebody would have weighed up. It's not a bad thing for those organizations. I actually feel like banking has been terrible at actually getting the ROI out of big integrations like that. Having seen HSBC and NatWest and Bank of America and a bunch of people do this, typically they never actually ever see through on the ROI. So if they're at this stage able to start looking at, this person looks very similar to this person, we should do it one way, like I'm bizarrely impressed that they're able to do that, if that makes sense. So, but as you say, the shakeout will be long on it, and probably a lot of people leaving to go and figure out what they really want to do with their life in terms of fintech startups that'll be born out of this period of time. As you touched on, Kate, earlier on, there are some sort of notable changes in terms of some of the big players as well. Jonas leaving Monzo. I mean, it feels about 4 seconds ago we were doing a takeover show of Fintech Insider in Monzo's offices. This was like way back in they were still putting cards in envelopes by hand in their office and distributing them. And we had Jonas and Hugo and Jamie and a few other, it was really weird. But the thing that strikes me every time I see Jonas now is he's a grown up. Do you know what I mean? Like he's gone from being like the starry-eyed, take on the world to actually he's delivered and made those things happen, which is amazing. So the letter was interesting, Kate, wasn't it? The sort of, it didn't feel quite like a goodbye letter, but it had those vibes a little bit, didn't it? Yeah.
It's always interesting when someone leaves kind of what they want to document as kind of like their farewell, like what they kind of want to focus in on. I've not met him personally, but obviously everyone raves about lots of components of the Monzo stack. He's off to settle down in the Cotswolds with his family. So all the best to him. I suppose it's an interesting time for Monzo now and he does again call this out in his letter. That he is the last founding or member of that founding team to leave. They've brought in some really experienced bank executives, T.S. Anil, and the COO to kind of really help steer them into this new period of their growth. So yeah, it'd be interesting to see, does the founders leaving the room have a massive impact? Rachel, as you alluded to, we've seen Monzo play around with its app layout. They're going through some growing pains. Said from a position of deep love and respect, but yeah, it'd be really interesting to see what they do post Jonas.
I've loved both Jonas's letter and Tom Blomfield's accounts of the growth journey of Monzo, but it definitely feels like they were founders for that 0 to 1 step, and Jonas, I suppose, from that 1 to 10, maybe 1 to 5. I imagine Monzo's 10 is unreal, and we're yet to get there. I do feel like there is a time and place for those founders with that specific set of skills, because it's a different challenge. It's a different team mindset. You're motivated differently and you operate completely differently. And as you move into Monzo, it feels like they're almost an incumbent now. Not they move very differently and much quicker, but they have such a large market share. They have a different level of regulator scrutiny. They do need a different team. And it's, similar to Anne Boden leaving Starling, Sam Altman leaving ChatGPT, although I'm sure ChatGPT are more gutted about it. I think there's so much more for Starling, Monzo, ChatGPT, all these companies, their growth journey is just different. And I think bringing a new team in shows a great level of founder awareness to say that you're not the right fit and there's someone who can do this better to push that company to the next level. I love seeing that kind of movement in the industry.
Yeah, it's fascinating times, isn't it? If the companies can outlive the founders not literally, like Jonas and Anne. Reportedly, their health is very good, but if they can continue to sort of fly along that vision, fly along the mission of really where they want to get to, foreshadowing slightly a show that we'll have in January, but based on the conversations with TS, I think they're only getting warmed up. So, and clearly it wouldn't be up to 10, Rachel. Obviously, it would be 11, right?
Sorry, my bad. 11.
Yeah, there we go. And on that note, we better take a quick break. Coming up, we're going to continue to look back on the biggest stories and events of the past year. What went wrong with Goldman Sachs and Apple? It was a bit weird, wasn't it? Will you ever give all of your money to Elon Musk? I'm not sure I will, to be honest with you. Don't go anywhere. Welcome back to Fintech Insider Insights, where we've kind of decided that the world's still in a bit of a weird place, to put it pretty mildly, I'd say. However, the banking and fintech world does appear to be bouncing back, which is good. Perhaps one of the reasons for this flurry is, of course, all of the partnerships that we're seeing across the industry. We're going to take a little bit of a closer look at the success stories in a moment, but there was one story that caught really everybody's attention. It was a bit of a kind of a rom-com vibe going on, but Goldman Sachs and Apple, I mean, they found each other, their relationship got a bit rocky, it played out in front of everybody, and I think the divorce is not what they would be calling amicable, would it? But all nearly within the encapsulated within the year. So what went wrong? I mean, in August, Goldman Sachs announced a partnership with Apple and the launch of that game-changing credit card that they were going after. However, in October, Goldman announced that the sale of Green Sky following third quarter losses and scaling back of their consumer lending strategy, which put its partnership with Apple in doubt. We discussed this back on the 23rd of October edition of Fintech Insider News, which actually, Rachel, was your debut. So this is going to be, more of the same for you. I mean, it feels like the whole sort of Goldman Sachs Apple love story is going to be a bit of a whirlwind romance. But I mean, David, what do you think? Does this have a knock-on effect for all of the sort of furore that we've seen around embedded finance and everything that goes with it?
Yes, I think it does. I mean, it's a bit sad face, right? Because all the way back towards the beginning of 2023 and even in 2022, Goldman Sachs and everything that they were doing was held up really as the exemplar in the future for what embedded finance looks like. So if you just take a step back and look at some of the things that Goldman Sachs were trying to do, they were really trying to build this entirely new digital banking stack in transaction banking, right? And they had Marcus as well there, and acquiring things like Green Sky and launching the Apple Card was all about sharing data and making more contextual lending and basically embedded finance, right? And to see that almost on the rocks and in tatters is in some ways a little bit depressing, but it does also show just how unbelievably difficult consumer credit, consumer finance actually is. And how many years and years of investment you have to make before you will realize a return. And ultimately, DJ Soul at one point sort of stood up and said, well, actually, this is loss-making. It's going to be loss-making for many, many more years. And we need to double down on the business that makes us money. And also, I do think maybe they made some mistakes with the credit card as well. I wouldn't necessarily call it a subprime credit card, but certainly the kind of people taking out lending on that card was more for just, we just need to buy Apple products on the card and maybe not pay back that debt. And that resulted in quite a few.
It's such a good point about Apple, though, because everyone was like, they're such a great brand, and like working with them, like it's obviously going to put your product in front of so many more people, but it's still Apple. Like they are so specific with what they put out, and they're not a financial player necessarily, so they're not going to abide by the same way a bank operates. And for someone like Goldman to enter a relationship like that with them, I can only imagine like two very strong entities with very strong brands trying to come together to create something. And Apple, I always thought they could go at it alone. Like, it's obviously partnerships are a good way to make advances, but as Apple, do you need those partners? And we're starting to see that now. Apple are like, well, we'll do open banking and we'll launch our own buy now, pay later. And who needs a bank? And I think it's so true with the resources they have, the brand that they have. What they could do more of is that financial due diligence around the customer base, because iPhones are expensive and yet somehow everyone has them, and it's not because they can afford them. But I think as they step into the financial space, that's the kind of stuff that regulators will impose on them, and they can learn their own way of doing that well. But Apple, it was a super interesting partnership to go into, considering that you wouldn't have had the same power you would have with a slightly less formidable brand.
Yeah, I wonder if I wonder how bad the ending of this relationship is really. Because, I mean, Apple are not the easiest organization to work for. I imagine the negotiations of like which bit, who did what, where, who the judge says was at fault for this relationship breaking down is going to be quite an interesting one, isn't it? But one thing for sure, I mean, the Apple's capability in financial services is not going away anytime soon. I go whole months now not knowing where the hell my wallet is, and I'm paying for everything on Apple Pay. I know it's not the credit card that was launched over in the US, but when it comes to payments capability, they're absolutely killing it, right? In the UK as well, obviously, all of the work that they did, the acquisition of Credit Kudos and the work that they're doing to integrate that in the UK. I think to your point, was that credit card actually any good that they were building over there? I know they spent a lot of time and money on it, but I remember Jason sending me a message when it was announced, which was like, basically, this is like version 1 of Monzo, basically. So I sort of feel like maybe the market's moved on a little bit. But maybe because we're living in the future potentially, but we'll see. I mean, there were a lot of other kind of partnerships that were announced and moved through. I mean, Adyen's and Klarna's team up to make cross-border payments easier for SMEs seem to go a little bit unnoticed as a kind of a big deal, but that's two gigantic organizations playing nicely to each other. Adyen and Klarna are really interesting companies. They seem like, grown-up companies where partnerships would probably work quite effectively. What do you guys think?
Yeah, I think it's interesting because they've both, they're global companies. They've both achieved huge scale, but they aren't based on legacy systems. So I think it kind of makes sense, two companies that probably are at sort of similar stages, probably similar degrees of technical sophistication coming together to kind of plug each other's gaps or kind of, move into areas where one has a strength and someone else has a different strength. So yeah, I think it could be a really interesting partnership. Also kind of, we've also talked recently on the show about the partnership between Wise, as in TransferWise of old, and Alaka Bank, also again teaming up to again try and make this international payment money movement space for SMEs easier. And I just have so much time for that as a problem to solve, because SMEs have a lot to do and a lot to put up with, and anything that can help make their lives easier is fine by me.
There's definitely a big story under here about SMEs and, how underserved they are globally, but also just how much money you can make out of providing services to SMEs. Let's face it. And part of this partnership between Adyen and Klarna will be to make it easier for SMEs to basically get the money out of the transaction, right? So it's faster, potentially lower transaction fees, etc. So seeing this happen all over the world, how does the merchant actually get paid? How can we reduce those merchant fees? How can we help SMEs trade across borders? Because cross-border payments is fiendishly difficult to do, which is why you've got companies like Wise and maybe only just a couple of others doing really, really well at it, but a lot of people actually really struggling.
Yeah, it's fascinating to see, isn't it? And as you say, the sort of underserved nature of those SMEs, given they make such a gigantic proportion up of the SME market in every geography. I think one thing really consistently, Kate, you'll probably nod along to this and jump in, is anywhere you do research in SMEs, you find basically a bunch of people who don't want to engage with financial services in any way, shape or form, but so desperately need it to be better. And it's an interesting balancing act there. We always say nobody starts a business to do business banking, but the business banks force people to have to get all of those things in order to really operate, which doesn't often seem to be fair.
No, absolutely not. And yeah, completely agree with that description. I suppose the thing that I always find really, really important to talk about when it comes to SME as a label is just how many businesses that covers. And I think, from freelancers all the way through to businesses with, dozens, potentially even hundreds of employees. So it covers such a broad range of businesses in terms of their scale, their financial maturity. And I suppose what we'd maybe seen in previous years was some innovation solving for the problems of particularly those one-man bands, the freelancers, those micro businesses. We saw the likes of, Tide in the UK, lots of others around the world kind of focusing on that bottom end of the market. I'm really interested to see the likes of Alaka Bank now starting to focus on what they describe as established businesses, those larger businesses, because I think that's a really interesting space. I love speaking to financial decision makers in those businesses, because you can tell, David, they're coming out of that period of, I don't want to think about the finances, but they're sort of starting to sort of realize that, oh crap, like actually, if I want my business to grow, if I want my business to thrive, I've got to make smarter decisions. I've got to be moving my money effectively. I've got to be putting my money in the right place. I've got to be managing my responsibilities. Like all of that sort of stuff comes into play, and businesses are fundamentally trying to like go for as long as possible without needing like a human CFO to make these decisions for them. So I'm really excited to see like innovation start to focus around that increasingly mature business. And we always talk about the future of financial services being like the private banker for the mass market. I think kind of in the business banking space, it's kind of how do you give someone a CFO without you having to actually like hire a person to come in and tell you what to do with your money as a business to be financially successful. So that's kind of my excitement around these types of partnerships is they might start to offer more sophisticated services to these businesses that are emerging and are so essential to economies around the world to support growth more broadly.
Yeah, I think someone on the podcast recently was talking about startup funding and how it's not growth for growth's sake anymore. They're trying to see like actually viable business models, and the micro SME market itself in Asia and LATAM in the Middle East, it's huge. Like the size of the prize is phenomenal, and the capabilities there are completely lacking. And this is it's actually a credible business venture for so many people. So I'm hoping now we're starting to see money go towards more services like this, especially as we're starting to see better capabilities for them, be it cross-border payments, be it open banking services starting to realize their potential. I think this is it's a huge opportunity for the startup space.
Yeah, I mean, the sort of economy in the way that it is, as you say, we talked about earlier on with a lot of people, we've seen Google let 15,000 people go. We're seeing people leaving Credit Suisse and UBS. There are a lot of amazingly talented humans going into the market right now. Inevitably, like there was in 2008, there's going to be a sheer volume of amazing startups being created in this period of time. So actually that space getting better served is probably inevitable, isn't it, in terms of the amount of people coming in to start startups in this space. Like one company that, I mean, is sort of promising amazing things, but I'll be honest with you, like goes down as my like villain. I feel very torn about this, I'll be honest here. Like goes down as like my villain of the year is Elon Musk. Like what he's done to Twitter like makes me really sad, if I'm honest with you. Like if you go back to the beginning of 11FS, Twitter was like my happy place. Do you know what I mean? It was like where the fintech community was at its best. It was where you could engage with like-minded people to, talk about things that you were passionate about. For now, it's like a desolate wasteland of just people shouting at each other and not listening to each other. It's very, very sad. He has made quite an audacious claim, though, that apparently X will one day replace all social media and banks. And he's got a bit of form, obviously, with what he's done with PayPal. He's not a stranger to financial services. But what do you guys think? Are you guys still active on X, or are you not so much?
Nope. No, I completely agree with you. I mean, a social network is not a rocket and it isn't a car. And I mean, fair enough, he was in the payments industry, absolutely. I mean, but that was in the 90s. And that was to solve a massive gap that existed in the market, which I think suited his skill. And, we still haven't seen anything come out of this promise that it's going to be a super app, everything app yet. Meanwhile, he bleeds ad dollars whilst sort of supporting racist comments. I don't know, it's all very odd.
Yeah, I think we can't deny that there is rightly or wrongly, there is a group and an ecosystem of people that X does serve very well. And we've seen it in the US in the political space. We've also seen it in the UK in the political space recently. Like there is a group of people who feel underserved, and that while we might find them audacious, to them it feels like he's really responding to their needs. He's creating a platform that they feel at home in. I think the question is how do other platforms respond to this? Because it could technically, if you win their trust in their hearts, then yeah, you could win their banking feasibly. And so how do we start to open up other financial services and more conversations to to make it feel less like a silo and more like the open platform it once used to be. Like we saw it with Coots and with Nigel Farage. This has got really political, but there are people who do feel like ostracized by what they saw there and felt maybe at the other side of it. And I think it's important that we don't shut those conversations down and that we keep them open, because banks aren't meant to be political leaning. They're meant to be open and for everyone. And if people don't feel like that's the case, what do we need to do differently to change that conversation? Possibly we all need to go back to X to make sure it's got more kinds of conversations like this.
Yeah, potentially. I think that's all true. I suppose I'm less interested in X and slightly more interested in like TikTok and Instagram. Like I just see maybe that's a generational thing or a personal thing, I don't know. But like if you just look at the sheer payment volumes that are now going through these platforms, like they're becoming marketplaces, they're becoming areas where people transact and discover and do all sorts of like insane stuff. Like just the numbers coming out of TikTok now are phenomenal. I just think it's super, super interesting to kind of see how that has shifted the space and kind of to think about what those companies are going to do, whether they're going to partner, whether they're going to build stuff in-house. Just the volume. I think TikTok introduced their tipping feature and just like the transactions going through that just blow my mind. So yeah, I think for me, it's less about X and more about TikTok.
Do you know, I saw a statistic though. It's like 1 in 10 transactions on TikTok and Instagram are actually fraudulent. Do you know, like actually, so the amount of products, because like I'm a sucker for like, oh shit, that looks, yeah, I want like a Halloween mask, or like, yeah, I want like Christmas lights for my house type thing. Those things never turn up. Do you know what I mean? So like, I kind of, that's not 1 in 10. So I haven't done 10 transactions and one of them's bad, by the way, just putting it out there. But it just sort of, it's a worrying trend, you know, again, on the embedded side of things. Actually, embedding payments is a great thing if you can get that right. But actually, the fulfillment off the back of it has got to be as slick as the sales process and the sales video that goes with it, I guess. I mean, I feel bad on the X side of things because actually I feel like it's changed what that community structure is about. Like actually, it felt like everything was earned before, whereas actually now it feels like it's a land grab monetization play. Anybody can be famous on Twitter if you spend enough money now, and almost actually every social media platform goes through that type of play. Like it's about community and building up, and it's all for the good of everybody in the town square. And then actually comes monetization. We've seen it on Facebook. Facebook basically became a pay to play. Twitter's become pay to play. LinkedIn probably is one of the few places right now where actually you can still garner really good distribution without having to spend $5,000 a month just to for people to hear your thoughts. So, but I'm sure Microsoft have got some good ideas for how they can monetize that at some point as well. So, all right, we probably should wrap up because actually, I mean, I feel like we're having. I forgot this is a podcast. This just feels like a conversation we would have over a cup of tea, but. We probably should wrap up and maybe at this stage sort of talk about what our highlight was. DBG, like what's your highlight of Fintech Insider for you this year?
I think it's probably less about what's been happening this year and more about next year for me, and that's AI. I don't think it's really, not AI, generative AI. AI is an enormous thing. Generative AI is a specific thing that sits within it that everybody's now excited about and talking about. So I think we maybe not even next year, the year after and the year after that for financial services is going to be extremely disruptive. So we've now had the EU AI Act come in. There's an executive order that Biden put in a couple months ago. There's regulation coming in. With regulation, banks and financial services institutions become, better and happier with using the technology. So it's going to be so fascinating to track how this gets adopted.
Yeah, it's fascinating, isn't it? That space seems to have taken over a lot of the other things that banks were getting very excited about. Do you know what I mean? I think it's important it doesn't turn into like just the next shiny thing. But bizarrely, actually, this like foreshadowing, and this might be horrendous or it might turn into something interesting. But I had a company reach out saying, would you like me to create you as a Gen AI bot to talk to people? And I'm like, that sounds amazing. So like coming to the 11FS office soon might just be me as a Slack bot, basically. So like, I'm not sure how it's quite going to make sure that my English is as poor as my actual English, just to kind of make sure it's convincing. But I'll kind of keep you guys posted if this turns out to be a thing or not. But Rachel, what about you? What was your highlight of the year?
I just want to say that DBG took a shortcut by stealing Gen AI from the rest of us, because that's obviously the big topic. No,
had to.
For me, open banking and actually seeing it turn into products for customers is my favorite thing. I remember working and slaving over getting open APIs live in the Barclays app, and we were so amazed by everything we'd done, but ultimately all you could do was aggregate and it was useless. And starting to see, like last time I was on the podcast and seeing Cresco and what they're doing for SMEs, I'm really excited by the regulation, by the other geographies looking at it, seeing the regulation coming in the US, Canada, in Saudi. I think that we've just seen the start of open banking actually having an impact beyond PFM and graphs and net worth that doesn't actually contribute to your life. So it's been amazing to actually see that in customers' hands.
Very cool. Kate, what do you think? What's your highlight of the year?
Oh, it's going to sound deeply selfish now compared to Rachel and DBG talking about these big industry. I mean, my personal highlight is always just talking to people on this show who are just building really cool stuff that I hadn't really thought about before I had the chance to talk to them on this show. So I was thinking back across, the different people we've spoken to, and I'm still kind of going around in my head. We had a great episode, I think it was new show 798, where we talked to Jeremy Balkin from JPNC. He's started a new kind of like refund as a service offering with Today Pay, and I just can't stop thinking about it as a kind of concept of like, actually, if you can improve that experience for customers, if you could make it so much easier for people to buy things and then get their money back, it's just a whole new opportunity space for both businesses and for consumers. So I've not done it justice at all. So actually, if you want to listen to it properly, go listen to Jeremy explaining it on episode 798. But I think refunds as a service is something I'll be watching out for next year as well.
It's amazing, isn't it? It looks like it's going rather well as well. I don't know if you've seen the pictures, but literally like advertising in Times Square, like it's going all right for him, which is good. But which is nice. I think I'd probably echo yours as well to a certain degree, Kate. I mean, the thing that I always find exciting, and the thing that you sort of look back on any year, is like the things that surprise you. The market has done things that I would never have thought possible. And definitely if you kind of look back, even like a 5-year horizon, you wouldn't have suspected all of these things would be happening in the market. But still, there's a huge amount of road to go in the industry, isn't there? There's so many, as you say, niches of fintechs that are cropping up with amazing ideas to democratize this or serve that market, or bring this to that or whatever. And that seems to be increasingly everywhere around the world, right? I'd say, this year we've seen an amazing rise of, African fintechs that are doing amazing things and solving real problems. South America is going from strength to strength. Nubank seems to be an unstoppable force, doesn't it, in terms of its march into other countries in South America as well. But yeah, I mean, it always surprises me, and we shouldn't be by now, that just all of the amazing opportunities that are in the market. So, I mean, God damn, like we've been definitely a bit depressing as this podcast has gone on in terms of all of the weird times in 2023. But I think we're all pretty excited about what 2024 and beyond really holds, which is probably a good place to wrap up the discussion. So thank you so much for spending the time in our offices, as we always do, but actually all getting together. Thank you so much. Kate, where can people learn a little bit more about you and all the good stuff that you get up to?
You can find me on LinkedIn, Kate Moody on LinkedIn, or you can drop me an email, kate@loanfs.com.
Very good. David?
It's LinkedIn for me. No X, unfortunately. LinkedIn, David BG.
Very good. Rachel?
I'm Rachel Pandyan on LinkedIn, and also no X.
Yes, boycotting Twitter at this stage, aren't we? LinkedIn for me. Do you know what? I said it a couple of weeks ago, and I did enjoy getting a bunch of emails. So you can email me on david@11fs.com. Thank you very much for everybody for listening. If you like what you've heard, then follow our podcast, and don't forget to leave us a review. It helps us make it better, and also helps other people find the show as well. As always, if you want to join in the conversation, you can find us on all social media channels, including X. We're not boycotting it just yet. Search for Fintech Insider, or search for 11FS, or if you really want to, email us on podcasts@11fs.com. Thank you very much for listening, everybody. We hope you've had a great year, and we look forward to seeing you next year. Goodbye.